All right. Hello, everybody. This is Mr. Anderson, True Crypto 28 on Twitter. Today, I'm going to do a video on market structure. Everyone that knows me, guys that are in my Discord or on my Telegram, have heard me say ad nauseum for a long time that in trading, it's market structure first, always. I've never said anything different. It's been my credo from day one. Especially day one on a public forum. So I decided, though, I've done some market structure type videos for people, but it hit me more recently that there's a real hole in people's games as it relates to market structure. And somewhere along the line, I think I missed this element of it. I think that somehow or another I missed the fact that this element of the basics was missing for many people. So I decided I wanted to make a video. That video got delayed a little bit due to some illness, but here I am. And I just want to go through this because, first of all, it's going to be pretty basic. But within that basic aspect of what we're going to be talking about, there's going to be a very important message. And what I would advise most people to do is to be very careful in assuming that you fully understand it. Because a lot of times people will dismiss something. Anytime that I've taught someone to trade, and most people are pretty receptive and they understand that, hey, everyone learns at their own pace, and really it's all about knowing thyself, and you're always the most important part in the equation of learning, because we all learn differently and we all understand and comprehend things differently. It's very difficult for me to assess how you might be understanding a new language like trading. But what many people do, the ones that have the most trouble, I see, is they basically come to a point where they feel like they have something or they got it, but really they don't. It's kind of hard for me to explain that, but I'll go through this a little more. But I think it's important for me to kind of mention that right here in the beginning, just so that we can make sure that although there might be some elements of this that seem very elementary, and that's good, by the way, the majority of your trading should be very elementary. You want to keep things simple. The more complex, I assure you, the more people are playing, make things up than anything else. So be careful of that. But market structure first always. So that's fine. And most people have a general idea of market structure and understand higher lows and higher highs, lower lows and lower highs, etc. But we're going to talk about that in a slightly different element, but it's also going to combine some of that as well. The things that I'm going to speak about today actually should be looked at on multiple time frames. Let's just say 2 time frames at once. But we're not going to jump into that. I might make a little note depending on how long this video goes at the end to kind of explain some of that, but that probably is going to be a follow-up video to talk about that. But still, we're going to focus on one time frame for the majority of this particular video so that I can get the point across. And then what I would advise people is don't assume that you just have it. Really put the work in to study charts and make sure that you understand exactly the point of what it is that we're trying to get across to you today, because this can be a dramatic game changer for many people. There should be aha moments in there. And I noticed that a lot of people, they get that aha moment, but it doesn't really translate to their trading. The last thing I would say on this particular subject is, if you do get what I'm talking about today, then you certainly should be a net winning trader, month in, month out for the most part. If you're not, if you're a break-even trader or worse, and that's fine, we've all been there in the learning curve. But if that's the case, then I can assure you that you do not have this part down. So let that part sink in and understand that, hold on, I'm missing something, because this is the most basic element. And everything we do revolves around this. Market structure first, always. Notice that there's a lot of guys that they claim like they're all market structure and they're Mr. Market Structure and those type of things. And some of them are great, but some of the great guys kind of go a little bit too far. Not that it's not good, as long as they're doing well, that's fine, but meaning they may explain too many things at once, because this is complex enough, which you'll see when we get into it, even though there's a basic element to it. Explaining it can be complex for a lot of people, especially newer traders. But regardless, that's enough of my caveat. I will tell you that I do have a sponsor here, which is BingX. BingX is an exchange that I've been working with. They have done me well so far. Everyone that's worked with them has also provided positive feedback, so I would advise anyone to check them out. They certainly do have a decent amount of assets, and they're adding them more and more each day. A lot of people certainly like them because of the fact that they're a little bit easier to work with than some of the exchanges that are out there. Some people can utilize VPNs and different elements from different parts of the country to work with them if they choose. But of course, I think do your own research on everything. My experiences have been very positive, so I would certainly recommend that. But at the same time, of course, we want you to do your own research and ask any questions you might have on it. But check them out if you can, especially if you like the video. All right, so market structure first always. It says trading is just business. Our goal is to buy at wholesale prices and sell at retail prices, or better, right? So what do I mean by that? This is a tweet that I put out many times. I have one version of it here, just like this. People often refuse to treat trading like they would treat any business. The simplest form, we want to buy at wholesale, sell at retail, or even premium prices. But people get caught up in just wanting more, no matter how high the asset goes, etc. It's just business. So this is something that, again, that I've tweeted out many, many times. But I realized that people don't exactly understand that element of it. I could break down a chart, and I probably should have had one available, but let me just kind of find this. It won't be mine. I don't think the person on Google will mind what we use, but it won't take me too long to kind of give you a brief understanding. All I want to do is kind of give you something like this to show you. Oh, nope, that's a video. I messed that up pretty quickly. Bear with me. See, this is what I get doing this on the fly like that, but bear with me anyway. I will tell you this, I'm going to have you take some notes as you go along. I didn't write them out specifically because I think that to each is their own in terms of how they're going to look at their notes and put their notes in, etc. But normally when people understand things or look at things like market structure, they're kind of taking this aspect to understand that it's basically higher high, higher low, higher high, higher low. But ultimately, downtrend, same thing, lower low, lower high, etc. So they understand that element. But the point, the reason I wanted to bring up a chart here was also to kind of show you a couple different elements here like this, which is to understand that, all right, maybe this is going on the daily. And you can see that it might look pretty uniform, but when you go into something like the 15-minute, that same picture can look very different, right, depending on your viewpoint. So there is a way to kind of break down that noise, and what we're going to talk about today is going to help you to get on that path. Again, I mentioned earlier in the conversation that I believe that you guys should focus on one time frame first and foremost, and I'm going to have to kind of get some ground rules out here because I know we have various levels of traders, plus I think it's important that you understand my definition. So I know you've been bearing with me already through about 7 minutes of this, but bear with me a couple more minutes as we get a couple ground rules out the way of how we're going to label things. Everyone labels things differently, especially when it comes to things like swing highs, swing lows, things of that nature. At the moment, I'm first going to label something as a minor swing high and a minor swing low. Okay, and we can do this a number of different ways. Let me just do an easy way, like we'll put a little m, minor swing high. I'm going to make this much smaller, probably change the color for you. But this is relatively important because although this isn't even the definition we're about to use, for the breakdown, we have to start with this to kind of give you an understanding of how I'm going to label it and how that could be helpful to you in your process. So pretty quickly, the way we would normally look at this is a minor swing high is simply going to be, first of all, it must follow a minor swing low, right? But it's simply going to be any candle, and again, everyone has a different definition, so I'm just going to give you mine, right? Because you want to be as rule-based as possible. Another key point in this is that there's a lot of subjective elements to trading, so it's really up to us to try to come up with some systematic approach so we can take some of that subjectivity out of it. Now, I'm sorry to tell you, subjectivity is going to be there as it relates to trading, okay? So get used to the fact that there's always going to be some subjectivity. But with that in mind, I do want to point out that you are going to want to try to simplify it as much as possible to have some rule-based elements in how you go about things. And then once you now learn your rules, right? Like a professional, you can also learn to bend them like an artist, but not until then, right? Get to that point first before you start bending the rules. Establish the rules. That's what's going to help you on your path to learning. So Minor swing high, minor swing low. If you know nothing about swing highs and swing low, Google is your friend. Maybe pause, go look at that for a few minutes, and then come back a little bit later. But we'll start with this. What is going to be a minor swing high? Any candle, right? Candlestick, if you don't understand that, again, same thing. Google is your friend. Just get a basic understanding of candlesticks first. But I'm going to spend about 2 minutes on this part, and then we're going to move on. Here we go. Any candle whose wick is going to have 2 candles on the left that have lower wicks. See how this is lower and this is lower, and 2 candles on the right that have lower wicks. 1, 2. Now, I will tell you that other people have different forms of this definition. Some people will like it so that you have this as the highest candle and then 1, 2 in order, meaning shrinking down to the left and shrinking down to the right. I don't utilize that rule. I'm okay as long as the 2 candles to the left and the 2 candles to the right both have highs that are lower than this particular candle. That's my set of rules. You can make your own later if you want, but for the purpose of this video, that's how any swing high or swing low is going to look. And we might come across an example as to how and the why, but for now, just understand that that's the reason. So minor swing high, minor swing low. Now, the only other rule that there's going to be is that you have to go swing high, swing low, swing high, swing low, right? So I'm not going to have a situation to where I don't go, I'm not going to say, let's just copy this. I'm not going to say swing high, swing high. I'm going to say swing high, then a swing low like this, because now the swing low is the opposite. I need that candle to have 2 wicks, right? The 2 lows of the candles to the left and the 2 lows of the candle to the right higher than this particular low, and that's going to be my minor swing low. And again, the next thing will not be a swing low, it must be a swing high. Now, there is one caveat to this, right? Which is going to be this. You ready for this? Important caveat, which is that because I can't go swing high, swing low, I also have to make sure that I do, in fact, have another swing high in here. Otherwise, I may have to move my swing low. Understand that? You might say, well, what are you talking about? What is the purpose of that? Well, you notice here, this does not meet the rules on this time frame. So on a different time frame, yes, this might be a minor swing high. But in this, I do not have 2 candles to the left that are lower. Now I have it to the right, but they're not to the left. And rules are rules, so for that reason, I would not label that as a swing high. Again, on another time frame, this is going to be a perfect one. But in this situation, I'm going to stick to my rules and go with that. But if in this situation I then collapse down, which we do, now we end up getting a swing high right here, right? But let's just say this fully collapsed down, right? And without this swing high ever showing up. Well, then I would actually move my swing low to that low point, because the swing low, even minor or major in that situation, is only going to be 1 consecutive, right? So you're not going to have swing low, swing low. I hope that's not too confusing. You might have to rewind this for a minute and kind of go over that. I don't mean to confuse anyone, but it is very important that you don't get 15 minutes into this video and not know what in the world I'm talking about as it relates to swing high, swing lows. Now, pertinent to this particular subject right now, that didn't happen, right? So we ended up going swing high, swing low. The next one would be right here. Why? To the left, to the right. Absolutely perfect. Clone. Here we go. Swing low. Looks like it's going to be here. Now, by the way, in real time, this would look like this. If you happen to be labeling them, you might say, oh, this is probably going to be my swing low. Well, it ends up that it's not. It ends up being this one, but you end up having to wait 2 candles to find out. So you may, again, label it and then slide it over if need be as you get more data. So that's okay. None of this is the most important stuff in the world, but I'm just showing you this because it's going to matter when we get to the rules of what I'm talking about as it relates to market structure today. So you'll understand in a moment. Okay. Swing low, swing high for now, right, as we just talked about. And then very quickly we see another one. To the left, to the right. That's why we're calling them minor. We might see a few of these pop up. Clone, where's my swing high? Now, first I thought, hey, this is my swing high. To the left, to the right, but I kept going higher. Now these are minors. Again, feel free to double check this if you like. And again, this is just all about labeling, right? No big deal, right? This isn't the most important issue at all. In fact, it's not very important, other than the fact that I now am going to move on to understand what I'm going to classify as a major swing high and a major swing low. And essentially what that's going to be, it's going to be the same thing, right? Except we're going to add one very important element here, okay? So I'm not going to now forget what's on the left of this, because you may find out that that might change some of what we're looking at. But We'll start from this point on. We'll assume that everything's correct. And I'm now going to move to a major swing high and a major swing low. And to do so, I'm actually going to utilize some of these horizontals. Let's just put it like that. I'm going to need about 3 of them. This. We'll get rid of some of these others. In fact, you know what I'm going to do here? Let me just clear everything out. Just like this. And I'm going to need 3 to move along to explain this process. Now again, you should take some notes as you feel necessary. You can certainly pause this video, make a couple notes if you think you need it. You'll see what I'm going to do is you don't need to do what I'm doing here. This is literally just so that I can explain this a little bit easier for you guys. Now, I could label this swing low, swing high, but in a major swing high and a major swing low, we're going to add something to the criteria, okay? Now, first of all, we want to understand which direction are we going. That's going to be a key element. And the reason for that is we're going to assume, you want to write this down, assume continuation. Now, just leave that on the side for now, write that down, assume continuation, which means in a downtrend, as this is obviously going, we're going to assume that we're going to break down. And I'll explain that in a minute. And if you're in your mind going, well, wait a second, that doesn't make sense, you're going to be wrong a lot. The answer is you're right. You will be wrong a lot, and that's fine. I will tell you that statistically, continuation, it can only go one way or the other. It's only either going to go up out of this zone or down from this zone. And I will tell you that continuation happens more often than reversal. So even if it's, let's just assume it's 55% continuation, 45% reversal. Okay. Well, then that means there's some edge to continuation, right? So that's why we're going to always assume it. But even if it was 51-49, I'd be okay with that as well. So I just want to point that element out because it is key. We'll come back to it in a minute, but we're going to always assume continuation. Now, for the labeling purposes, what we have is we're going to have to make sure, now this way, I'm only going to measure this one as swing low and swing high, okay? But we're headed down. So in this situation, what happens is, pay attention, when we break, when it does happen and we make a lower low on close, meaning I take out my swing low to the downside on close, at that moment, what happens is we're now going to search for a new swing low. So that is something that we can do, but the first thing we can also establish is where is the swing high? So we'll talk about that because remember, if I came down to here in real time, I might think like, hey, that's going to be my swing low, but we find out a couple candles later that it's not. So you might temporarily label this, as I mentioned. Again, this is the semantics part about it. We're going to move on to the interesting part within about 5 minutes, but this is a key element to understand that the breakdown itself is going to help you establish the new swing low, but here's the key to the swing high, okay? When this happens, what you're going to do is you're going to now look to the right. Always, I'm going to give you some arrows so that you understand, because this is the same whether it's swing high or swing low. Your swing high or your swing low after you go ahead and break structure, right? So anytime you break to a lower low or to a higher high, you're going to be in a situation where you will now go ahead and look to the right of that structure. So swing high, right? In this case, swing low was made right here. And I'm going to look for, very important, the next swing high, which is the highest between this swing high and my new swing low, okay? So I can actually mark that pretty quickly. And you might say, oh, it's right here. Well, not on this time frame. On another time frame, yes, it's probably like a 4-hour supply zone rejection, certainly a swing low on the 4-hour, etc., but not here. Stick to the rules. It's going to do you well. And in this situation, that's going to be your new swing high. So I would have moved this to here. I'm waiting to establish my swing low, just like that, okay? And that's an important element. Now, let's kind of go back in time here a little bit, just to draw you some more pictures here, because again, this is just about understanding how we're going to label these for the time being, and then we're going to get into the crux of why we're doing it. So very simple. If I just take 2 points in time like this, and let's see, I was here like this. This isn't about accuracy. It's more about just showing you how we're doing it specifically. And what will we do in this situation? We would have had swing high, swing low. And by the way, I'm always going to have these lines these horizontals on the swing high and the swing low. And as soon as we break structure, meaning I now take out this level on close, that is when I'm going to say market structure broke. I'm now at a new swing low, and I need the highest point between these two levels. That's why I have two of these up here, so that I don't want to forget where I was at. And I now want to go to the next highest point, and that's going to establish, for now, my new range of swing high and swing low. Now, it took us a while to get there. I get that, right? But it's very important because this is going to be a key for you to understand exactly how we're going to map it out. And then always, we're going to assume continuation, right? You'll understand that more in a moment, but assuming continuation would have then had you break down, I'll move this back up here, right at this level to this particular low. Again, we now would have been looking for the next swing high in this equation, which comes here. Why not here? There wasn't two candles below. This one, is there two below? Yes. So this is the swing high right there. And that would have been our next level as a swing high, just like this. And we'll get into more of the how and the why in a moment, okay? So I think everyone agrees that they understand. If not, rewind it and take the time necessary to understand that part. Because if you mess that part up, none of it's going to matter, okay? So we have to make sure that we understand very specifically swing high, swing low, okay? Now, you might ask another question. Why? Why are we doing this, okay? Good question. Why is a great question. Let's just go somewhere else on the chart just to kind of figure this out. I did not plan any of this out so that you guys can understand that part. That's key, right? Let's go look at a reversal first. Let's look at an area that's wrong first, right? So you say, wrong? What do you mean? You haven't explained anything yet. Well, you'll see in a minute. Because there's a key part that we haven't gotten into at all just yet. So at this time, we would have been in a situation to where we would have basically set a swing high somewhere around here. And again, I'll do a lot of these examples. I'll start slow. I'll eventually go very fast through them so you understand. Once we broke down, let me focus in on this because I'd rather go slow here because if some people turn it off, they turn it off. The people that don't turn it off are going to get a lot of help from this, and I'm okay with that. What happens here? So here you were assuming continuation. It didn't happen. You broke down. Okay. So now we keep our swing high in place for now. And this is, at the moment, our swing low. Until what? Until we lose structure right there to a lower low. So what would be that one of the first things we would do in this equation? We would go to the highest point. Remember, you're always going to have to be to the right of your swing high and your swing low. Understand? So we're starting from this point because this is our swing low. So here's our swing low. Regardless of what direction we go, it's always going to start to the right of that. So then I'm going to bring that high. It has to be to the right of this level, which I raise up to right there. And this would be my new zone, except for the fact, of course, I got to drop this to find my swing low, like this. Again, initially we would have looked at it that way, and then you would have dumped right through and got yourself part of that particular dump. But I haven't told you the most important part of this equation yet, right? Because if you remember, what we said we're going to discuss is something very simple, which is it's just business, guys, right? It's just business. We want to buy wholesale and sell retail. To which point we're just going to bring in a very simple tool like this. Boom and boom, swing high, swing low. Now remember, we reversed right here because we lost structure. Now I'm going to try not to talk about other things that don't have anything specifically to do with this discussion, but it was at this point that you lost your structure, and we flipped this to be assuming a reversal, a continuation to the downside, right? Because we were assuming that we were going to continue to the upside, and guess what? That did not happen. No problem. We stay with our rules, and now we can continue to the upside. But I've left out this entire time one very important element, which is that I'm going to grab a Fib Retracement Tool. Fib Retracement, right here. If you don't know anything about Fib Retracement tools, what I would suggest that you do in this situation is pause the video, Google it, get some understanding of the definitions of Fibonacci Retracement, etc., and go from there. But it's very simple. It literally is just taking any range of your choosing, and you're going to look at that range, and it's going to break down a couple elements to this particular range, right? One of the elements is going to show you is the midpoint, which is going to be a key that we're going to talk about here. And then other numbers. Fibonacci numbers usually 0.236, 0.382. This is the golden pocket. Again, you can easily Google this information and get much more information than what I'm telling you here. I happen to have the 0.706 on there, a number that a lot of people like as well. What's on there doesn't really matter. It's completely up to you. Pick your poison and what you want. The real important one that we're going to focus on is the midpoint, right? Why? Why are we going to focus on the midpoint, you ask? Oh, good question. Because the goal here is always going to be, right, to buy wholesale, or short wholesale, by the way, and sell retail, right? So let me explain some of this to you a little bit further, what we're doing here. Kind of break down a little example here just so that I can show you where we're at here. So let's just kind of switch time frames just because I'm cheating a little bit to cherry pick an example where we would have broken down and reversed right here on this particular time frame. So here we are with the zone and a range on the 4 hour that would have looked something like this. And we would have been looking for, and again, I'm admitting that I'm cherry picking this because I just want to give you a first example of one that is tenable to the conversation that we're having. But in this situation, all I'm looking for, I'm going to use one of these boxes here, is my ideal scenario in this business of trading, right? If I know like, hey, I'm expecting continuation to the downside once this broke structure right here, right? Then I would put myself into a position, let me see where it's at, by the way. I was actually incorrect. That level is right there. Okay, that I want to put a Fibonacci retracement. Let me do it real slow. Okay, understand again, we were moving up, broke structure here, closed below our swing low, right? And then I reverse this to have this as my new range with this low that was established right there. Now, until I close lower, which happens over here, I'm not going to extend that range until that happens. But what do I want to do if I'm looking to short? What's the ideal scenario? Now, this doesn't mean it's the only way to play things, right? It doesn't mean it's the only type of trade. But we are talking about edge-based techniques, right? We are looking at levels that we say, hey, there's going to be edge if we can find a reason to short in the wholesale zone, okay? Understand that, wholesale zone. That's the key here. Let me get a quick drink for you. All right. So here we are. Why do I have this box here? Because I'm putting this box in the 50%, right, level of the wholesale zone. What does that mean? That means I went from here to here, from this level to this level. I marked off that particular range, and ideally, if I'm going to find myself a short, it's going to be best to find it where? In this particular zone, okay? So forget anything as far as the specifics about finding the trade. I'll do other videos on that, etc. But I want you to understand the context of this, right? In this scenario, we know that once we establish that low, the moment I climb back in, I've wasted a lot of effort to get up here. And what you might notice, some of you may not see this, some of you may understand completely, is that you begin to start a range again on a lower time frame. So this moves up, range out, and then a reversal takes place. You also can get what's called a swing failure pattern right there, right? This is an ideal situation. Now you have expectation on the higher time frame that you're going to continue to the downside. You have an expectation on this 4 hour time frame that you're going to continue to the downside because we're expecting continuation. Now, again, we could be wrong. If we are, that's trading. We'll move on, right? We'll manage our risk, take our losses, and that's okay. And now readjust to the new data and the new direction that we're going to assume. So here we are. We've assumed to the downside. And then we also got what? A range on that lower time frame. So I'm ranging. Momentum sure is going to be getting exhausted, right, for people that look at that. And you start seeing something like this, a qualified signal for people that utilize that tool. For people that don't worry. There's other ways to do it. But the key here is not even the focus on the signal. It's the focus on the fact that you end up getting a, what? Wholesale price, okay? So the wholesale price, we're not going to talk too much about stops or anything along those lines. You can do a couple things, though. If you ended up taking a short in this area, you could say 1 ATR above the high of this particular range right here. That's a normal type of stop. You might say, hey, I want to give this room. Maybe you take 1 ATR above this level, which would be very far apart. And all that would mean is you got to take a smaller position, and that's a whole nother conversation about managing risk and how to establish the size of your position. But that's one that would give you the ability to say, hey, I feel comfortable with the direction, so therefore I want to give my trade some more room in the beginning, and therefore when you get something like this dump candle, you're going to be pretty happy that you grabbed a position. But either way, it is what it is. You see what happens here is that you end up finding that. Now, guess what else happens? This falls out. You end up getting a swing failure on the other side. Now, I can tell you that we can expand this dramatically, right, and go into multiple time frames, and we can actually look at how a swing failure on this side can also lead you to what? Some type of mean reversion type of balance. You can get very advanced with this, but I would advise you not to go down that road just yet until you really get this on such a deep level that you see it automatically, like in the Matrix, right, where they say, you know, all I see in the code is blonde, brunette, redhead, etc. That's how you want to see this, right? You want to see value zone, range, understanding where I'm at in terms of the positioning, things of that nature, understanding the time frame analysis, things of that nature as well. Some of that might sound like gibberish, so until then, just focus on the one time frame. Otherwise, you're going to drive yourself crazy. But I do want to point out that you end up getting what? Failure here, swing failure. That bounces back, guess what? Right back into that value zone yet again. And you get what? Type of tweezer top on some time frame. You certainly find yourself a little swing failure up here as well. And that rejects as well. By the way, that's a qualified signal. And that one eventually dumps out to a lower low. Okay? So I wanted to give you a real example there. And then from there, again, you could watch that example 10 different times if you choose to do so. But I just wanted to start you off with that. And then we can kind of jump into the gist of this and really kind of move along very quickly. I'll try to clean this up a little bit. It's going to be a little bit messy because I do have to continue to show you, one, these zones, and then two, what I'm going to have to show you is the Fibonacci retracement areas and of course, the value areas. But we're going to run through after this particular part. People might recognize this as the COVID drop, which is fine. Well, let's see what happens. If we are here in this situation and we end up going lower, great. We get it. That happens. The high between these two areas would have been this level right there. And then you really just dumped on through over here. And you end up with this scenario where you got a pretty big range. So in all fairness, let's draw this because this is going to end up giving you something that is not going to continue down. But I want to show these examples. It's actually very important. First of all, people that understand me, the first thing you want to get out is this 0.236. Get out of the way of that. If that confuses anyone, don't worry about it, but that's a conversation we have all the time. I would call that dump susceptible. If the tables were flipped and we were moving up, I would call that pump susceptible. So it's just not an area you want to be around, and if you were hanging in that area, you can expect some further continuation with some edge there. But regardless, I want to point this out in that once we establish this level, I would have drawn this box like this, and by all means, we would have looked for or expected, right, continuation to the downside, right? We assume it. To say expect is actually a wrong word. To say we're assuming continuation. We're looking for edge-based trades in that direction. Like, so, as an example, like maybe you decided to get involved here or here. A couple of things you'll notice is that you don't normally get crushed even when you get a signal. Now, normally you would do is you would actually zoom in and find yourself a reason once you reach this particular level. So you reach the level, and then at that point you say, all right, well, let me see if I can find a reason to short. And same thing here. You'll see that they take their time, right? So it's not a normal situation to where you short and it just flies up in the opposite direction when you're in these value zones, because there is a battle going on. Even if it's going to reverse, there's a battle going on. But this was a tricky zone, right? So you end up getting some areas here to where you actually end up seeing a swing failure type pattern within your zone, which is actually very bullish. But then eventually, guess what? Not bullish, which would actually normally be pretty bearish, but it pushes right through. So there was a bullish element that came about it. And that's good. That's good news when that happens. See, people see that and they go, oh, I was wrong. I'm disappointed. I feel bad. This sucks. I'm screwed. No. That's intel. That's actually good information. Remember, you don't ever know anything in trading. That's the lie. That's the trap, right? Thinking that you knew, oh, I knew it. You didn't know. You knew nothing, right? You're reading it. You're taking a good educated guess based on some solid technical analysis, but you don't know anything. And if you start thinking you know, forget it. I live on the fact that I don't know, and I can admit that. So because I don't know, I have to manage constantly, right? And that's the idea here. So what happens? You still end up with this big range here until we broke out right there, and now I have to flip things to understand that now I have to assume what? I have to assume continuation to the upside because I broke structure and now I'm dealing with this. Now, you can draw your range this way. You make this little high right there. I'm thankful for that because you stayed in this pump susceptible. I just gave a little, this particular video is not about pump and dump susceptible. That will be another video down the road. But I do want to mention it that these are never surprising. Because remember, we're looking to buy in the value area, but at the same time, I'm happy for this to hang out in that above that 0.236 because that's going to give me pump susceptible type of reads, right? So if I get a signal of any kind in these zones, yeah, those are going to give you playable type of formations, and there's a lot of strength in there. The fact that you're not reversing, even though there's a lot of resistance here as well. They came in really for the most part. Bears already lost; they just didn't know it at that point. And this is helpful. You end up making a slightly higher high here, which allows us to then say, all right, well, let's move this level up. I would actually get to move all the way from here. Remember, you're always going to the right of that previous higher high. So I'm able to now, let me clone this guy like this, set a zone here. Why? Because this was my previous higher high. And to the right of that, my lowest point, my lowest major swing low is going to be right there. And here I end up with this little tight formation like this, which is good. That allows me to say, all right, well, this is going to be my new zone. And ideally, if I could, I would like to buy at a wholesale price if I get it. Okay. And I'm going to run through some of this. Again, I'll start speeding up soon so this video doesn't go too long. But I do want to make some really good points here so that people can understand. And one of the biggest points is that what you're going to notice by doing this, it doesn't matter that you might be right 55% of the time, because what you're going to end up doing is catching ridiculous moves this way, ridiculous trends, things of that nature. And you'll also notice that, hey, a lot of times you don't get chopped up as much as you would think because you're buying value zones, right? You're buying in that wholesale zone, and that's the benefit. So here I am. After this happened, I'm really, ideally, it doesn't mean I won't take other trades, but if I'm playing it here on this time frame, it's this level where I start to pay attention for my trades. And I'm going to continue this the whole way through so you can understand what I'm doing. But I think if I said to you, like, hey, only take these trades, especially if you're a net losing trader or a break-even type of trader or someone that's really streaky, I think you could kind of see the value here that if I say, hey, your buys are only going to be in the green box, good news, right? Quick drink, sorry about that. So you can see where we're coming from there as to why that happened. So now I'm here. I'm not going to go in to show you other reasons as to why you would have bought here. There's a lot of reasons. I mean, you can do simple things. I would look for some confluence. If I get some bull divergence of some kind, go along with, a trend line break, maybe, perhaps. Obviously, some of that's subjective as well as how you do it. So again, we'll probably pile on multiple videos down the road to kind of get into those specifics. But again, if you're buying in that area, pretty good, right? You can buy like your first higher high and set a stop, one ATR below the low of your particular range. And simple as that is going to do quite well for you. The better you are as a trader, the more effective you'll be as well in getting into these, putting entries in that make sense, etc. So here I am again. I was here, and guess what happens? We assume continuation, and guess what? We get continuation. Now, does that mean that I won't take some profits into this resistance or into the swing high resistance, especially if this wasn't the strongest pattern in the world? Absolutely. I'm okay with taking some profits there. That's a normal part of trading. Have a take profit 1 and take 2, whatever you want. But ultimately, just understand that even that action within the zones, if I'm taking some profits while I'm running in, might give me 1, 2, 3 cracks at it, and I still might get the continuation. So a lot of benefits in going about it that way. But here we go. We level up just like this right there, right? So we actually first leveled up right there. And then we ended up saying, all right, well, where was the low, the swing low from this point down? It was here. This is the lowest point. That's what we always want to use. So now I got to redraw my little zone here very quickly, and I'll start to move much quicker. If I make a mistake or two here or there, it's not intentional, but I am going to show you exactly what these will look like as we go through. And at that point, I'm looking what? To buy here, which I don't get that chance, right? I end up staying in this pump susceptible zone. Now, one of the things down the road that you might have to make some decisions on is how do you draw out these levels? Some people, especially on the lower time frames, on the lower time frame, I might extend that range up completely instead of getting this too tight, but I'm just going to stick by the rules at this moment in terms of how we said we were going to do it. And we would have leveled up like this. We never got the wholesale pricing that we would have wanted. But let me show you something interesting that happens here, right? So here we go. We would up again like this. I'm not going to keep doing it when it's obvious that we didn't get an entry, but in this situation, you did very quickly, right? Why did that happen? And I'll zoom out in a minute like this to make it visible. I'm always looking at a giant screen, so sometimes I forget that anyone's watching this. They might be looking at a normal screen, and that's my fault for not zooming out, so I apologize when that happens. Okay, so here we go. Just like this, I made this high, but the same candle goes back all the way back into what? First of all the way back to the lows, to sweep the lows here, which is nice, but all the way back into our wholesale zone. Whether there was an entry here or not, you would have zoomed in to find that out, but you still see if you were playing these entries, guess what? One move, two moves, three moves higher, right? You can see how that could have played out. But again, you would have leveled up here again between this point and this point. Where was the low? The swing low by the original rules would have been here. Where would the value zone been at that point? It would have been right in this 50% range right there. So I'm taking as that wholesale pricing, the lower 50%, just like this. And I like this one because we already know that it eventually fails, right? But look what happens. You come down into the zone, you get what? Little swing failure action of your zone. You also get the little tweezer bottom type scenario here on a different time frame. But ultimately, a bounce back, what? Above 50% of the zone, 50% of the range. So again, even if you got hurt somewhere in here, you probably even caught some profits, I would say, but certainly not hurt too bad when it did happen. Well, what happens? You break down. In that situation, we just kind of reverse course. No big deal. I want to get this out of the way. We would assume continuation, but obviously it didn't happen. Now, a lot of times you'll see this happen where they're dump candles like that, right? You get these big dump candles where they weren't giving you buy signals anyway. So that's a big thing that happens on these reversals, is that you don't normally see buy signals appear, what would have been an actionable type of long and then dump through. It will happen at times, and that's why you have stops in play. But you can kind of see how this formation goes. It goes back to the midpoint, back into the golden ratio type zone of this, and then falls out, right? And no harm, no foul in that situation. So very quickly we would have established, okay, here we go. We keep our range high, keep our range low. This one, just sometimes, by the way, you're operating on a higher time frame, right? So on the weekly scale, something else was going on. We'll talk about that down the road. Don't confuse yourself yet. Just stay on one time frame. But guess what? In this situation, same situation, I would have had to reverse this, of course, because now we would have been technically assuming that we're going down, right? Continuation to the downside. It doesn't happen, and that's okay. You quickly here, you see now where's the value? I want to show you the wholesale short zone would have been up here. And I do want to show you this because, again, this is important to show you that it doesn't happen too often that you just get crushed up here with this assume any type of continuation scenarios that we talk about. Because up here, this would have been that area where you say, all right, I'm having a consolidation. But what would happen is, the confirmation of a signal would be that you get a consolidation area on a lower time frame that breaks down. But you notice this just ranges out the whole time, right? You never leave the bodies of this candle. So you're ranging, and it doesn't happen. But even if you would have had a stop in place. You would have taken your loss like a man or a woman and just move on, because that's trading, right? With no stress or anything along those lines, because now you're thinking, hey, up's more fun. I'm good with that anyway. And you'd be right. Up is more fun usually. So here we go. Break out like that initially. I'll move this box here. And again, I'll start moving a little quicker like this and like this. Obviously, we don't get any, you're continuing on here. So as we see continuation, I could have tightened this zone up a lot, just like that. And I might lose these levels, if you don't mind, and just start using, in fact, let me just do that. Okay. If you don't mind, I'm going to just start using this here. Because I went from here, I leveled up, so I would have been looking at this particular high right there to this particular range low. We'll zoom in. I think you guys got the gist of how this works now. And in this particular situation, range low is here, just like that. So again, value zone type of entry, if I can get it. Well, I happen to get it pretty quickly here and here. Again, you would zoom in to see if there was an actionable reason to get in. Maybe there wasn't. If there wasn't, that's fine by me. Again, I'm not trying to oversell this at all. This kind of speaks for itself, and it's pretty basic stuff. I'm not reinventing the wheel here, right? So here we go again. We move it up again. Do we get value zone? Look at this. You get it again right there. past that 50% mark. Again, if you zoom in, if you would have found the reason to continue from that point on, of course, pumping up into the pump susceptible type zone again is a good thing. You would have liked that. And then ultimately, same situation occurs. You level up again. Remember, anytime there's a higher high, and I'm going to bring this level to the lowest point between the two. Now, this one stays strong, pump susceptible, right? Still up in that 0.236 until we extend out. So I end up extending significantly up here. And then we do reach a point where you don't really see an entry for a while because this thing just moved. But again, you were assuming continuation. So you would have been riding that until you basically started, at least until this level, right? Until you started to range out a bit. So no harm, no foul in that situation as well. Ends up leveling up yet again right there. Drag this out like that, right? And guess what happens? Like, I really should keep this box up for a majority of people out there, because you end up in a situation again to where you say, all right, well, I leveled up. Do I get another entry? Look at this, 1, 2, again, back into our buy wholesale. See, this is the idea of the market on all time frames. And again, this happens on all time frames. On all time frames, you get this continuous element of chop. The guys that are constantly on the daily, they're patient. The money, especially the good traders, that's patient money. That's smart money. And they want to buy wholesale, right? So that's the idea here behind this premise. So it's not that the trend changed, that some are just playing on a different time frame and maybe their trend changed, but on the daily, they were still looking. And this idea of continuation is going to help you, right? I mean, again, for the people that use my indicator, what do you end up getting? Actionable buy signal within the wholesale zone. That adds another element to that particular signal for you, right? So what happens? Level up again. This one looks like it's just going to pump through, but still we would just maintain our focus and see exactly where that ends up going. Like this, you hang. Now again, this is that pump susceptible. That's a whole nother video. You end up staying up in that level. That's how the continuations happen. And sure enough, we do get that to that particular level here. And again, you're assuming continuation, so the majority of your plays are to that side anyway, not to mention the fact that you might have other skills that are going to help you along with that. Now, again, this one's just going and ripping during this particular part, which is fine. Now, two things could have happened here. You might have stayed in this particular setup here, depending on how you viewed this. Again, that's all relative on how you like to view things. I don't see a swing low within this, so I think that's fine. To do it that way, what happens, you end up in a given day breaking down, seeing an entry into that zone that rips back up into the pump susceptible zone that we talk about. Again, another reason for actionable long type of play. Takes you all the way up to this 42,000 area like this. Finally do get to change your swing low look right here. Again, so during all of that run, you would have been thinking, let me buy. There's reasons to buy. If you were wrong small, as we've already seen in all these examples. But then once again, here I am through this entire pullback that we see. Where am I looking? I'm looking at wholesale. I want to buy wholesale. I want to let this thing do what it needs to do. We understand that, if you look at different things like there's some tools out here like this. Okay, this doesn't mean trend reversal. This means momentum shift, right? So look at the red momentum, right? So I'm patient during that time. I'm very patient, but it doesn't mean I'm not looking for longs anymore. But I might draw myself. Once I'm in this, especially for a while, the longer the consolidation, the better. I'm consolidating within what? A wholesale zone. That's good. Give me a reason to exit, right? Something along these lines. Now, again, we'll talk about entries another time. But if you would have zoomed in, you would have found some entries for sure in these particular levels. You would have went here and seen again. This is this formation that we talk about when you start seeing things that give you some sort of accumulation type formation, draw a rectangle, etc. And start to look, because on a lower time frame, that's going to look like an extended period of time that finally breaks out of its range, and then suddenly you hold that on the backside. You see these wicks now are switching. So where you had these scenarios before where you couldn't break above this particular level on close for quite some time, and now all of a sudden your wicks are bouncing off that 4 days in a row, you're closing above that particular level and then off and running yet again. So you had many opportunities in this particular zone to buy wholesale, right? So that's a key. And then, of course, what's that going to do for you? It literally takes you up to this 57 type of region, like so. Level up. Let's see, right there. And the low would have been, actually here, would have been that retest. You level up again. Obviously, that stays pump susceptible all the way to here. and you end up tightening this range a lot, right? Now let's just see. Now remember how this played out, so this is going to be interesting. But now look what happens one more time. So now here we are. You can notice that we do see some shrinking in the extensions here a little bit, but that's okay. We're still going to play by our rules, and we're going to assume continuation, because that's what we do. We assume continuation. Why wouldn't we? All right, so we're assuming continuation, and what does that get us? Well, it gives us a straight dump down to this level. Again, you would zoom in to try to find reasons, but even on the same time frame, you get what? Qualified buy signal in the bottom half of your wholesale zone. You end up getting a swing failure within your zone as well. That's awesome. We want to see that. Nice bullish looking type of candle in that scenario. It's actually a double swing failure of your zone and from 2 days prior, which is nice as well. And there would be 100 other reasons as to why you might have looked at that for a reason to particularly long, but that's okay. What ends up happening? Swing high again, all the way up to this particular level, which is here. The low of swing low would have been here. By the way, sometimes when I see a swing failure, I might just keep that range because technically it is the same. So that's completely up to you how you go about it. But regardless of that, guess what happens? I'll show you this again. Whether you use this one right here that we kept it at, or even dropped it down, doesn't matter. You still end up in a situation where guess what happens? It comes right back to the wholesale zone. Yes, it does. And you get yourself, oh, look at that, qualified buy signal again, which again takes you higher. Now, again, we're not extending. That's a warning sign already, like something's going on here, that we're not seeing the push that we were seeing prior, but that's okay. Just stick with your rules again. Now, from that particular level up, you end up going all the way up to here, okay? Because that's the low point between your higher high, back to the original rules. From that point on, you go to the right, it would be right there. Okay, so here we are, higher high, and guess what happens? You're assuming continuation, but this time we do not get it, finally. Now, let's just keep in mind that you literally rode the entire bull run up expecting continuation because of a simplistic set of rules, right? Assuming continuation paid you off in spades, you did well, okay? But look what happens. We end up taking out that level on close. Now, this might have been the first candle, but of course you would need a follow through. Anyone that sees that candle, I understand that is a swing failure type of candle, but you want to see what? The next day's candle follow through here and take out the high of that particular candle ultimately. Doesn't mean you wouldn't have some, maybe tried to front run it, maybe you zoomed in, took a long, I get it, but as soon as that started to break down, you would have been out in that situation. But guess what happens? You do end up seeing a qualified long signal, okay, and that does take you back to a level, but I want to point something out. This qualified long is a different system. That's when you're combining systems. In this situation, what we're talking about with buy wholesale, assume continuation is a break in structure, right? So this is a level that now broke structure. And because of that, I'm going to clone it because I do want to continue to show you this particular level right there. I would still have this as my swing high, and now my new swing low is right here. You know what? Let me see something. It won't take me long to find this because I know I was just going to say something, but if I just say it, people don't believe it. I remember when this happened, right? We've talked about this a few times, but we said, don't you bounce back to 59,000 in reverse, right? So this is a breaking structure. I just want to point something out here. So first and foremost, and I'll show you this tweet in a minute, but the idea is now we're looking what? For continuation to the downside, guys, okay? Because we flipped. Here we are, like so. That means I got to flip this guy as well. I'm going to start him from here. Remember, you start your 0 there. Okay. So now that we finally had a break in the structure, it doesn't mean that we're not going to get our mean reversion type of long, right? So that long signal, and I always tell people, take that last long. Even though you break structure, go ahead and take that long, a qualified daily long or something along those lines, because you will usually see some sort of mean reversion off of that, right? And it rejects in the worst possible place, right in the golden pocket here, which is at 0.618 to 0.65 zone. Let me get one more drink of water here. But guess what? Suddenly, you would have been the guy that's in look for continuation to the downside mode. Now, we've seen a couple times that this hasn't worked, and you can certainly get chopped up. But now we're in a scenario where it's going to finally pay off, and you'll understand why we do this. Well, here we go. We start to see some compression, right? You start to see a range here and a rejection at a point where you do not want a rejection here. But here it is, it rejected. And you're in this scenario where you realize, it's okay, what happens when we break down from that area? Not only do we continue down, but I just want to point out that this ends up just falling out to such a tremendous low. And in fact, again, let me go back to the tweet I just pulled up. This is one from recent, but you'll see the tweet date, the original one, right? So, okay. What we're talking about right here is basically once we started to break structures, it's problematic. We expected a bounce, right? We expected a bounce, but there was now a problem. And you see this level right here. You see this line right there, that red line, that target line, 28,617, right? 28,617, you say. Okay, well, let's go ahead and turn that red again. We'll make it big. And we'll put the coordinates on it that say 28,617. Boom. Huh. 28,617. Now again, one more time. April 23rd. So on April 23rd, that's when we begin to look at that. Not because I'm cool or special or anything along those lines. No, just targeting the range low from the previous range here. That was all, right? Okay, breaking structure, we might have a problem and break back to the previous range. It really isn't that special, you know what I mean? It's just that people, they get married to an idea, they get married to 100,000, 200,000, will never break down under 50,000 again. That's what everyone was saying at that time, right? And the more you hear it, the more you realize, oh, this is in weak hands and this is a problematic situation. And, you know, this is a high time frame failure pattern, which isn't good, followed by a breaking structure. And now suddenly you're expecting continuation to the downside, and it's fast and furious to the downside that eventually gets you literally to the number. Okay, so that's it. I mean, I've kind of stretched this out. I will show you one more example here, in just to give you an understanding of time frames, because you can do this on any time frame, and understand that the lower you go, of course, you're going to experience more chop because you're going to see more scenarios that play out. Well, let's go to something like a 2-week, just to prove my point. Now, I'm not going to mark these levels off over and over again, as I stated before, but I'll use this guy, my Fib retracement, like this, to say, what? Oh, sorry. Low to high, and expect continuation. So even on these super high time frames, you go to 2-week, 1 week, monthly, etc. And this is eventually what we'll talk about, is combining two time frames. Why? Why would you combine two? Well, it's helpful to understand, like, hey, if I'm weekly assuming continuation to the upside, but daily assuming continuation to the downside, well, then maybe I'm just in a pullback on the higher time frame on that weekly scale. And now that weekly zone is going to hold more importance to me. It always holds importance, but now that I understand, hey, this is relative because it's holding that zone. And now if my daily flips back to assume continuation to the upside, and the weekly was already in that situation, and the weekly was also in a wholesale zone, my friend, you're now a trader, right? Now you're getting it. Now you're understanding the confluence element of how do I really stack chips? It's not by going 20x. No, it's by taking a normal management position in a good spot and capitalizing on that over and over again, having the patience to wait for those particular setups. Now, again, don't jump into two time frames right away. Master this till you understand, till you see it again, like the movie The Matrix, when you're just sitting there and you say, oh, I see it, I see the zone, I see this. I don't care when it flips because all I'm doing is reading the charts. I'm not, you know, there's a difference between assume continuation and know that continuation is going to happen. No. Assume continuation, I said, right? There's a big difference between the two. I hope people can understand that. Did I mess this up again? I sure did. Okay. So we'll start with this point. We'll go to the early days of good old Bitcoin just for this example. And I'm sure we'll have some chop on the higher time frame eventually too. But all we got is this low to this extreme high. Yes, $163. Oh, by the way, might as well go further back in time. What am I talking about? Okay, I already messed this up. I will get this video done in under 5 minutes, so don't worry. But I think it's relative to show this, right? Because let's just look at some of these extreme measures here to say, all right, well, here we are. This might be too small. I don't even know why I did that. Okay, forgot that I'm on a 2-week chart. So instead of killing myself here, let's go swing low. What am I doing? To swing high. just like that. Finally got it, guys. Okay. And on these high time frames, you might say, get out of here. Look at that ridiculous trade. Well, guess what? The guy that's trading on the 2-week chart is patient, right? He's not waiting to trade tomorrow. He's not expecting it to flip tomorrow or anything along those lines. But he wants to buy value. He understands wholesale, right? Well, guess what? Dropping below this level, pretty scary, etc. We get it. By the way, we already talked about on the daily, probably the 3 days, probably even the weekly. We were reversing in this action, right? And that's okay. But on this particular chart, guess what? We ended up finding ourselves in a position where we now have an extended rectangle, my favorite pattern, within what? A 2-week wholesale zone that breaks out right here in this spot. Wow, okay. Now, there's reasons to zoom in and get better signals and sharper signals. I got it. But guess what? You can buy wholesale. And even if this thing ran back up to the midpoint or just the golden ratio zone where it does find some resistance or whatever it might be, you would do pretty damn well. But guess what? On this time frame, believe it or not, continuation worked. It really did continue. You really did get the continuation you were hoping for, and you eventually closed above that level right there. Well, if this was my low at that point, then I'm going to move it to here. Why? Because I have to go to the right of my higher high, and the lowest point is going to be that particular level. There we go. Perfect. Did I switch? How many times am I going to switch this up? My goodness. Forgive me, guys. All right. So that would be my new level right there, etc. Now, this time we're going to push, obviously, on this high time frame. But I shouldn't say obvious, like we didn't know it was going to happen prior. But the idea is that we see that it pushes. And that ends up stretching out here. You stay in that pump susceptible zone pretty quickly. And between that high and that low is going to be that level right there, right? This was the previous swing high. This is now the new swing low because it has to be after the swing high. And look what happens, even on the high time frame. Value, anything under that 0.5. Value, right? So you're now back into that value zone. Let's stretch this higher now. We end up making yet another higher high. When I make that higher high, what am I going to do? I'm going to bring this level up to the right of my previous swing low, just like this again. And guess what you end up getting? Value. You end up seeing it come back into the value zone, pop back up, zoom into the daily or whatever it might be, find a reason to buy. I'm not going to do that on this video. We're already far too long. But you get the point, and guess what? On this high time frame, you're moving up. And the next move happens to get you up to that 20K level, right? That extreme move. Here you are, assuming continuation. You're playing this high time frame, and guess what? You just caught one of the greatest expansions in the history of the market because you used a very simplified approach to how you trade, right? So that's the idea here. Come up to this particular level right there. Of course, you're going to love this one, guys. Okay, so I love the 2-week chart for anyone that doesn't know me too well. Okay, so guess what? Bubble burst. The bubble burst, guys, right? We know we have a bubble burst here. But look what happens here. Interesting. So while we're down sloping, do range out here, but this is obviously a negative formation that we see, lower highs, etc. And then finally, what happens? Way down at this very low level. Yep, you got it. You range out for quite some time. You finally break out of that range. You're in the value zone yet again of this particular scenario, right? And you find yourself in a position to where, although it takes a long time, let me stretch this out so everyone can see, you end up, and I want to put this in the right spot, right there. You would have had some element of a crack at this that ran up tremendously, right? Everyone remembers that. COVID comes back into that area again, finally pop back up, and then eventually takes out that particular level. Very small move up here, by the way, because of this extreme time frame. So my new low would have been here, and my new high doesn't get established until I get way up in no man's land up here. And again, you could use the weekly for this or whatever you like. But then something interesting happens once you level up again, right? Go up to this particular level. You've already seen that, assuming continuation has been dramatically beneficial for you. And your new swing low is going to be about here. I will tell you that when you get into like the 2-week and monthly, again, feel free to stick directly to the rules as you say, but I will take, I'd be lying if I didn't tell you that, I'll take a candle like this and I'll utilize it as a swing low for good reason, in that you're just not going to have too many scenarios during normal pullbacks where you're going to have 2 candles higher and 2 candles lower, etc., meaning meeting our rules of swing high, swing low. But again, that's up to you. If you decide to follow that, you'll see it'll still work pretty well regardless. But something interesting happens where you establish this particular range, right? So without extending this video any longer, this is a range on this high time frame that we've been playing in, right? So you end up saying, all right, well, I'm expecting continuation. Guess what? We rectangle this guy off here, and eventually this super high time frame buy signal brings you back to the top of the range, which people don't realize that, yeah, it looks like a higher high. But it depends on your time frame, right? On this high time frame, no, this is actually a rejection and a rejection, right? So you end up rejecting that particular level twice, and we make our way back all the way back into this lower half of this area. Will we now find ourselves in a position to range out again and go? We'll see. But the point is, you can see how this can be helpful, right? And you can see how you can start to piece together the multiple time frames. But be careful. Now, what I would say is start with like a daily. If you master the daily, I mean, you focus on that for a long time, go to something like a daily and a 4-hour. If you're on that 4-hour, maybe go to something like a 4-hour and a 15-minute for the purposes of this. But also, more importantly, study it yourself, right? You know, put enough time into the chart so that you yourself have a visual understanding of what makes the most sense. That's what's going to give you the greatest edge. But that's it. Buy wholesale, sell retail, right? Or better. And you'll notice that the edge is going to be dramatically better by going with this particular approach. Hopefully you guys got something from this. TrueCrypto28 on Twitter. I'm out for now. More videos to come.